Welcome to Amararaja Batteries Q1 Fy26 earnings call. Short summary. Management began by highlighting consolidated revenue of 341 crores, a 4% year-on-year growth and 11% quarter-on-quarter growth. They noted that 95 to 96% of revenue comes from lead-acid batteries, with the remainder from new energy batteries and chargers. Lead-acid revenue stood at 3,270 crores, supported by robust OEM and aftermarket demand across four-wheeler and two-wheeler segments. Tubular batteries showed substantial quarter-on-quarter growth, while recently launched lubes doubled in year-on-year volumes. Telecom lead-acid volumes fell 30%, but UPS industrial batteries grew 15%. Lithium pack volumes exceeded 100 megawatts for the telecom sector, protecting market share above 15%. The new energy segment revenue was 122 crores, aided by storage growth, while EV demand slowed due to lower OEM orders. Cumulative investment in Amararaja Advanced Cell Technologies reached 1,200 crores, with 350 crores infused this quarter. Margins were subdued at 11 to 11.7% due to material cost pressures, power and employee expenses, and increased trading revenue. Capex for the fiscal is projected at 1,200 to 1,300 crores, mostly for new energy projects, with the rest for lead-acid batteries. Upon asking about export volume outlook, management said exports declined 7 to 8% this quarter, affected by some weakened international markets. They expect stabilization in 1 to 2 quarters and hope to expand into other markets to regain growth momentum. When asked about overall industrial segment growth, management explained that telecom lead-acid volumes fell 30%, while UPS batteries grew 15%, resulting in an overall 3 to 4% decline in industrial lead-acid volumes. On home inverter volume growth, they noted a 3 to 4% increase quarter on quarter. Regarding margin pressures and trading mix, they mentioned that antimony costs have stabilized. Previous price hikes were taken in Q4, and while no immediate price increase is planned, normalization of the tubular plant and power expense resolution should gradually improve margins in upcoming quarters. On lithium battery investments, management said they invested 350 crores in Q1, bringing cumulative investment to 1,200 crores. The first NMC 1700 cell capacity will be 1 gigawatt hour, mainly for two-wheeler applications. To complete the research lab, customer qualification plant, and first gigafactory, an additional 1,200 crores will be required. LFP expansion may be considered later, with full gigafactory operations expected by Fy27 end. Upon asking about four-wheeler OEM growth, they clarified that strong growth came from higher allocations on existing platforms, with no new customers added. On unorganized market share, they estimated 10 to 15% across four-wheeler and two-wheeler aftermarket segments, noting it has been relatively stable over the past 3 years. Regarding lithium cell prices, management observed a recent uptick in raw material costs but no change yet in cell level prices. They believe $50 per kilowatt hour was likely the bottom, and prices may trend upwards. When asked about tubular and recycling plant ramp-up, they reported the tubular plant started commercial production in July, expected to reach 150,000 batteries per month within 2 to 3 months. Recycling plant refining operations are on track, while battery breaking operations may reach full capacity around October to November. On energy storage system opportunities, management confirmed active development across retail, commercial, and grid segments, with a dedicated team driving solutions and updates expected in coming quarters. Regarding talent acquisition for new energy R&D, they described a three-pronged approach: tapping global expertise, hiring expats for cell design and ESS solutions, and building internal capabilities through partnerships. Currently, 150 to 200 engineers work in these areas, with ramp-up planned as gigafactory operations expand. On GST impact, management explained lead-acid battery GST of 28% may come down to 18%, aligning with lithium batteries, improving working capital and collection processes, and potentially challenging unorganized players. In conclusion, Amararaja reported steady lead-acid revenue, strong new energy growth, expected margin improvements, and continued investment in lithium battery capacity and R&D. Thank you for listening and subscribe for Concall summaries like this.